Hello and welcome to Dukascopy TV. Now, with some analysts saying recovery in the Eurozone is far from over, and others saying everything is going swimmingly well, how should we react to the news that the European Central Bank will be rolling out its own version of quantitative easing? Is this the best medicine for the current ailments inside the Bloc? Well, joining me on the line from Zurich is Bet Segenthaler at UBS. Bet, thanks for joining me. Do you think quantitative easing by the ECB is the right move, given concerns that it could cause more problems for the Eurozone periphery?
Thanks very much, Thomas. Yes, well, first of all, I would say that I don't think it's a done deal at all. There's been a lot of talk about QE, some form of asset purchases from the ECB, but I think actually most of it has been overdone. Clearly they're studying things. They could either buy sovereign bonds or they could purchase other assets. The problem is that none of these will probably be very effective. I mean, it's quite complicated, really, how to do it. For the Fed, it's been much easier because there is an MBS market, for example, so they could buy MBS, mortgage-backed securities, which doesn't exist in the Eurozone. So it's a lot more difficult there.
Why do you think Mr. Draghi is rolling this all out now and not previously, when the Euro area perhaps needed it more urgently?
Yes, it's certainly a good question. I mean, one of the criticisms at the ECB has been that they are always a bit too slow, but political sensitivities are obviously quite great, particularly in Germany. So he has to go step by step. Previously it was all about the OMT. That was a very different thing, but it cost him quite a lot of political capital, so he has to be careful not to spend it on something that will not yield results. So I think currently what he's trying to do is get something going on this ABS side, asset-backed securities, in some form where they could eventually buy bank loans, which I think would be a sensible thing to do. But the problem is it's not going to be ready, I think, before October, November at the very earliest.
There's been a bit of a mixed reaction among investors. Isn't there a danger that the markets will get too used to these handouts and abnormal liquidity in the system and just forget that this is just a temporary measure?
Yeah, now you sound a bit like the Bundesbank, and of course, indeed, what they are saying. And these concerns are much greater in the Eurozone than they are in the US, for example, which means that it's much easier for Bernanke previously and now Yellen to do QE than it is for Draghi to do something similar. But it's clear that growth is very low, inflation is very low in the Eurozone, so there's certainly a rationale. But again, the problem is what exactly to do. Draghi said it quite nicely last year when he said, many people tell me to buy assets, and I said, yes, that's very nice in theory, but I asked back, what assets should I buy?
One article I read recently expressed concern amongst investors that this Euro QE could disturb the normal running of the bond markets. Do you share this concern?
Any intervention on a large scale by a central bank will have some distortive effects and is kind of potentially a problem. And I think, again, in Europe, people are particularly aware of that. So what would happen if the ECB says, okay, we are now going to buy 500 billion of sovereign bonds, of which 27% Germany and 20% France and so on, according to the ECB capital share. What do you buy, for example, in Malta? Do they have a bond? So, what do you buy in Estonia? I mean, these are kind of, you might think, irrelevant issues, but still for the ECB, it will, it does pose technical problems in terms of how to exactly do that. You can't just go out like the Fed and say, okay, let's buy a bunch of treasuries, which is easy to do. You actually have a lot of operational and technical difficulties, even apart from the political side of things. So it complicates this all greatly.
Okay, thanks for joining me today, Bet. I'll be back once again with the last press review of the trading week. But for now, bye-bye.